What's up, guys? This is Carter Thomas with Coin Mastery TV, coming in live from I'm legit in a movie theater. Check this out. Like a private movie theater. I'm at a hotel, and this is the only place that I could record a video in peace. So please bear with me. This is probably not going to be the longest video. So for anybody who's been commenting about getting shorter videos, here you go. Make sure you guys go and subscribe, coinmastery.com/invest. Sign up for that newsletter. Get rocking among these exciting and tumultuous times in cryptocurrency. We are here to help you guys make better decisions, make more money, generational wealth, all that good stuff. Today, like I said, we're probably going to talk about fewer topics for a variety of reasons. I kind of have to go, but I wanted to make sure we get a video out. So we're going to talk about Bitcoin. We're going to talk about what's going on with Bitcoin. We're going to talk about what might happen with Bitcoin. We're going to talk about altcoins. And then we're going to talk about a little piece of news that I saw that I thought was really interesting that may have some interesting implications. Speculation, nothing like a good dose of speculation to get the weekend started. I think it's what we all love, right? So let's just fire this thing up and see what's going on here. Okay, I'm on the 5-minute chart, which, as we all know, is completely worthless. So I'm going to scroll out and let's take a look at what's happened in the last really 48 hours. Yesterday, when we were talking, it really started screaming up. Right around here was when we did the video, right around 5,300, give or take, a little over that. And then yesterday, we saw a second bull run up to 58, I guess, well, like high 58s, almost 59, not quite 6,000, which is that would be a very, very big deal. I would say that will be a very, very big deal at some point when 6,000 gets breached. So a few things that I'm looking at that I'm keeping in mind when I'm looking at this. The first thing, which I tweeted about, go make sure you go on Twitter at Carter Thomas. Tend to talk there a little bit more, or that's where a little more commentary if you want to see what's up. The first thing is that being really conscious of this was, for the most part, this was about a 19 to 20% run, which is, that's a lot. That's insane for a $90 billion, now a $90 billion dollar market cap coin, close to 100. That's crazy. Right? You don't see that very often in a liquid market like this. But the entire world went bananas, right? That's like, everything is going crazy. And the reason why is because from a market proof of concept standpoint, for Bitcoin and crypto, for something that big to have that big of a jump is newsworthy, because that's something that people can change people's minds quickly, right? That's the thing that most people really care about, as they should. That's the front page of the news. However, it's also really important to realize that while they're like everything on Twitter and everything on Facebook and everything on the news you probably read is talking about how this is the bull run of the century and this is the craziest thing ever. And it was. This is a big deal. The energy that's going into that we are all consuming, that every day we see it, the energy that we see in that leads to a FOMO level that is on par with that energy. If you see an altcoin doing 20%, you're like, oh, well, that's great. With altcoins, those things bounce up and down, no big deal. But if Bitcoin goes up 20%, it's like, oh my gosh, this is unbelievable. And the reason why this is important is that, for the most part, if you're watching this video, listening to this audio, 20% is 20%. I don't think that there are many people in this audience that are moving like $4 or $5 million a week in order to need a market as big as Bitcoin to be that liquid so that they can actually scalp that kind of trade. There are a lot of people that have that kind of money There are a handful of people that I've talked to who are Coin Mastery members that have that kind of money. But for the most part, you're moving $500 to $500,000, maybe $5,000, $50,000, whatever. You don't need a market as big as Bitcoin to make 20%. 20% is 20%. If you're buying ADX, if you're buying, I don't own any ADX, I'm just using that as an example. If you're buying any altcoin, or if you buy Bitcoin, if you have Ethereum, if you have Litecoin, 20% is 20%. And the reason why I'm bringing this up is because it's going to seem like you're missing the biggest boat ever with Bitcoin going up 20%. But it doesn't seem like you're missing the biggest boat with altcoins going up 20%. It may feel like that if you miss it by 150%, but that is a cognitive bias problem. And I'm not saying that anyone's doing anything wrong. It's just that it's easy to get caught up in that, and you end up making rash decisions because 20% seems 100 times more important than another 20%. When in reality, if you're not moving the kind of money that really matters, 20% is 20%. You find the opportunities wherever they lie, and you go in on those opportunities. So I think that's the first thing that I've really noticed is the difference, and that frenzy of news and information, how much of a difference that can make, and just being conscious of it, and making sure that who cares where you get your 20%, just get it. That's it. Buy the dips, scalp it, be done with it. So that's the first thing. The second thing, which was starting to unfold a little bit yesterday, and now it's very clear that it did unfold, is this thing. And what I'm pointing to, if you're on the audio, is I'm looking at basically between high 4,800s up to low 5,100s. And we see this just straight up green candle. I'm on the 1 hour. You go to the 30-minute and you still see that straight up. It's not quite as big, but you still see it. So that means that it was a very, very, very fast, non-traded out bull run. When I say traded out, I mean that it didn't happen with the up and down, like natural progression. It just shot up and it kept going up from there. And historically, when you look back, anytime that you see a chart that has this, remember we talked about this back in the first bull run, but anytime you see this, eventually that's going to need to get worked out. And this comes from talking to a couple traders. This comes from doing my own research about this. This is not necessarily a golden rule, but it is something that I think is important. And it's debatable on, right? The real analysis is, well, which of these mini runs is really the name of the game. But for all intents and purposes, this level, in my opinion, just has to for this thing to go to 10K. I mean, you can't leave that kind of gap in the middle. And so for you guys, or for I guess for me, right? Like what I'm going to do is this thing could easily go to 6,000. It could easily go to 6,500. And if it does, great. I mean, at this point, after this second dip, which we'll talk about in a second, I'm just letting this thing do it, just go. I don't know how much more I can really try to time it. If it really crushes the alts again, obviously I'll try to pull another dip. But at this point, it's like, if it goes up, I'm just gonna let it ride and wait till it comes down at some point. So that's the first option. But more importantly, I think it's going to come back to this area. I mean, high 4,800 or maybe like low 4,900s. If we get really lucky, it's going to come down to this 4,500 area. But just when you look at the historical charts, not only on Bitcoin, but really on anything that has a market chart like this, anytime you see these straight up things, they eventually get, I mean, that's like back here, everyone thought when I said 3,100, 3,000 that I was crazy. I was way, way too low. but it happened. And I'm no expert. I'm not trying to be an expert here, but that's what I'm doing. And I would encourage you guys to, if nothing else, remember this one truth is that it's always going to go higher than you think it will, and it's always going to go lower than you think it will. Every single time. That's how markets work. That's why it can extract money from people and move it to a few people. So this has arguably already gone a lot higher than people think. Maybe 6,300 might be like, that's really beyond what everyone thinks. But it's also going to go lower than everyone thinks. And so my big move is, at this point, mostly just waiting for a dip in Bitcoin, which will, it got weird, that lighting got weird, will impact the altcoin market in an interesting way. One thing to remember is that there's not necessarily inverse correlation, right? If Bitcoin goes up, altcoins often go down because the money comes out of altcoins into Bitcoin. But when Bitcoin goes down, it doesn't necessarily always mean that altcoins will go up, because that money could go back to fiat. Now, I think that nowadays, a lot more money stays in crypto. So I think you're actually going to see a closer inversion, because they're trading pairs, right? I mean, you're inherently trading against Bitcoin every time you trade. So I think you actually will see more of a correlated inversion than we did back in the day, because people are less likely to scalp their Bitcoin trades back into fiat. I think people are more likely to move it into altcoins. And the reason why I say that is because you look at the market cap movements and you do back testing on that, you talk to different traders, and that's what they're starting to do a lot more of. People are just are less likely to move it back out to fiat, meaning as Bitcoin comes down, if, at whatever the next dip is, you will probably see a more correlated spike versus historically it was when Bitcoin evened out and people got bored with the lack of returns. That's when they moved it into altcoins. I think that now you might actually see a closer correlation as well as that stagnation. So I think you will see another bounce from altcoins, depending on Bitcoin losing momentum here, both from the news cycle and from the charts. If it goes down, I think that you're going to see money coming back into the altcoins, which begs the question, well, what do you do with altcoins? Well, we talked about this on Monday. Let's open up something that I don't own just so that you guys can, let's see here. I'm trying to get one that Zcash. I don't own any Zcash. I don't own it anymore. But pull this up here. Look at the 1 day. Hopefully this is maybe I should do the 1 hour. But the other day, so it came down, everything kind of hit the bottom, and then it bounced back up, and then now we got a second dip. And so the key is always when you see the dip happening, and you can really figure out what the dips are based on the volume, really where they come in. That's not the one we want. We want the one over here, where you see a lot of these, you always want to look for the 4 red bars, and you see the volume increasing. That's the dip. That's when you know it's a good time to buy, and that you're often going to see a reversal. You can get into the candle size, like this is called an inverted hammer right here. That's like the sign that things are changing. And then you can get your 20% bounce, and then lo and behold, you get a second dip. And guess what's going to happen? It's going to have the same exact bounce, which is already starting to do when you see a less of a extreme reverse hammer right here, but then you see the bigger candle coming up. So what this means for you is when you buy the dips like this, when you see Bitcoin racing up and you see the volume increasing and the price tanking, it's always good to buy a dip. But it doesn't mean it's going to be the only dip. It just means that it's an opportunity to scalp trade. And so when you buy the dip, it's not like, oh, I bought a dip and now I'm done. It means that I bought a dip with the intention of making a quick buck, knowing that I've got my eyes open again for another big scalp trade or whatever it may be in that particular coin. So I think that that's really important, is to the dips rarely come like everything at once and then it's done and we're back to the races. It often comes in stagnated patterns, the same way bull runs come, because it needs to squeeze out everybody's funds so that when the real deals come, the only people left are the people with a lot of money, or the people that waited the longest, or whatever it may be. And that's a risk, but that's why the markets do what they do. That's why it keeps pushing the price up and these keep dropping, is because it knows 80% of people in this market have already expended all their cash. Like there's nothing left for them to buy. So everyone now is like, well, I hope this comes down so that I can get my money on the dip. And that's fine, but realize that markets are designed to do that to people. And for you to beat the markets, you got to have a strategy so that even if it looks like the best dip of your life, you don't put all your money in, because there's always, like, you got to live to die another day type of situation. And that's what I would always encourage people to do. Just like on, this week, there was a big dip, hopefully you bought some, scalped it. And then today and yesterday, there's another big dip. And I hope you're buying up whatever it is you're buying up and, scalp that. But for all we know, this could go back up to 6,500, and there's going to be an even bigger dip. And, well, I mean, who knows what you're doing? I mean, maybe you're taking out money out of the bank or maxing your credit card. I mean, whatever. You do what you got to do. But there's always going to be something else that happens the next day, and you always want to be able to at least participate in that. Right? You never want to try to time it perfectly. It's impossible to do, because that's what markets do. It always wins. Or I should say, it always rewards the most patient people and the people that have the most money. That's, I guess, a better way to put it. So what I would recommend for anybody out there, I shouldn't say I'd recommend, because I don't recommend anything. This is not financial advice. What I would say, what I'm doing is going through my 5, 7, 8 coins that I'm really into, looking at what they are. Let's look at waves. I do not own any waves, but let's just look at it and start to look at the patterns, right? Look at how deep did the dip go? What does the price action look like? What does the volume action look like? How does this play into Bitcoin? What does the order book look like? What does the different time frames look like? What do the candles look like? What does the chart structure look like? You put in all these data points, and that's when you can make a decision on when you put the price in. And when you put the price in, a good habit to get into, which is a very difficult habit to get into, is to set your limit order like uncomfortably below what the price is currently at. And that's just a really good habit to get into. One that took me a long time to get into, but it forces you to get the better deals and to wait it out a little longer. So in this case, I'm not saying that this is a good idea or not, but I would set it at like 55 after I had done analysis and checked this all out. So the end of the day, what it really comes down to is there's always going to be a bigger, deeper, more profitable dip. And if you don't have the money, you're going to get yourself into a little bit of trouble with that. All right. Last thing I want to talk about here is this blog post, which you guys can check out, which is on blockchain.com. This is owned by Roger Ver, the big kind of tyrant of Bitcoin, or whatever you want to call him. I don't mean that in a negative way. That's just kind of the reputation he has. His on this, he owns this. He's a big investor. I should say he's a big investor in blockchain.com. There's a guy, Peter Smith, I think owns it or founded this. But what's interesting about this blog post is they say, here's how you prepare for the hard fork. Check this out. At the bottom, they kind of loosely put in, you'll be able to use all your Ethereum related functionality. If you have transactions to make around late November, we suggest you buy some Ether in our wallet today. What? Did he just say that? The official blog of blockchain.com is telling people that they should go buy Ether in the face of this new Bitcoin fork bonanza. Why would they be doing that? Now, you can make your own conclusions on this. Anyone can really kind of, I don't know, whatever. But if I was going to think about, my take on this is that they're basically trying to get people to sink the price of all the Bitcoin, of 2x, of Bitcoin Gold, of like everything, so that there's a dilution of funds, because the more Bitcoin BTC goes down, Bitcoin Core, the original Bitcoin or whatever you want to call it, or the more it gets diluted into SegWit 2x or into Ethereum or whatever it may be, the more the opportunity is for Bitcoin Cash to make a huge play. Incidentally, blockchain.com recently implemented Bitcoin Cash into their wallet. This is really interesting. This is a very subtle thing, but I think that this is actually, I don't know what the reach is on this blog, but this to me makes me believe that guys like Roger and people behind, maybe not, I don't know about SegWit 2x, but definitely behind Bitcoin Cash, but people who are not like pro BTC would be pretty excited if there was a lot of confusion around BTC, because as you guys know, kind of from a geopolitical standpoint, when there is a void in the market, somebody is going to assume that void. There's going to be some sort of power grab, whether that's Bitcoin Cash, whether it's BTC coming back, whether that's Ethereum, whether it's SegWit 2x, I do not know. But it's really interesting. The seeds are being planted in this way. So who knows what that means? I personally think that this is like TBD. I'm gonna keep an eye on this for sure. I don't know if it's pro Ethereum or anti Bitcoin, but something's brewing. I'm watching it. Anyway, with that, guys, I'm gonna roll. I think some people want to get in here to watch a movie, and I appreciate it. But going into the weekend, keep your eye on these dips. Keep your eye on Bitcoin. You know, probably the best thing you could do is just get prepared for, if it goes to 6,500, if there's another dip, do you have a plan? Maybe it's just wait. Sometimes doing nothing is the best plan. Actually, I would say oftentimes it is. But with that, you guys, I'm going to roll, and I will see you on Monday. Have a great weekend. Peace out.